Hello, everybody. It is Saturday. It's 2 for day. I'm going to first of all do the quick Bitcoin daily, and then I'm going to break into what happened this week. And it was a very, very big week in news. So we all made it. But what's really interesting is we had the second worst ETF week ever. Monster dumpage. But price didn't fall. And this is my new theory. And it's called we don't need no we don't need no ETFs. And Grayscale, leave those kids alone. Anyway, if anybody knows where that's from, let me know. And I know we don't need no ETFs uses a double negative, but it's part of something special in history. So we're going to dig into who maybe this new potential buyer is. Thank you as well for coming. Thank you to the mods in the chat and everybody for being here. Let's go. Not financial advice. You guys know the drill. And thank you to everybody on Patreon. Let's look at Bitcoin monthly return so far. June started off with a bang and then a whimper. Now we are down 1.6% for the month of June. And people are very depressed. But it's the summer. The weather's great, unless you're in the Southern Hemisphere. Hello to Australians if they're up. Let's talk about the news. A lot of breaking news as well. And by the way, I share the news. I share the most pertinent things that you need to know. Some of it may be offensive, so if you're easily offended, it may not be for you. First of all, Bernstein has a new $200,000 target for 2025. They talk about how, well, first of all, they are a major asset manager. They have about $725 billion in assets, and they predict Bitcoin will not only reach $1 million in the year 2030 and beyond, but also a possible rise to $200,000 as early as next year. And this bullish prediction follows the initiation as well. Yesterday or the day before, they initiated coverage on MicroStrategy with a $2,980 price target, if I recall. And they are very interested in MicroStrategy because they own 1.1% of the Bitcoin supply. In fact, they own a lot more than that when you assume 4 to 5 million Bitcoin are lost. And it's great to see so many people now factoring in the lost coins, which is wonderful. The people that dream that there are 21 million Bitcoin, forget about it. There'll never be more than 15, maybe 14. And people are losing them every single day. Let's talk about the poopy week we had. This is a bonkers chart from Sina. A nasty week of dumpage. The second worst week since January 11th of this year. Bitcoin was the only one that got any flows. Grayscale, massive dump. ARK, big dump. Fidelity, big dump, etc. But you know, this is the crazy thing. Cruddy, huge dump to the tune of nearly $600 million, 580, 600. We'll get to it later anyway. But this is what happened. Huge ETF outflows. And the price of Bitcoin only fell 0.87%. This is a win. A very big win, too. And it's funny because I always see patterns and numbers. 0.87% sounds familiar. We can drop. Well, Bitcoin inflation is only 0.84%. Weekly drop 0.8%. I thought they rhymed, they matched. And of course, gold is higher, but you can get more gold inflation. If the price goes up, you can dig a little bit deeper. Now, it was also a big week, too, because Michael Saylor was talking in Prague and told a lot of very good stories, like an $8 billion price target and such. But also, he slipped the fact that he believes at least a 24% compound annual growth rate for Bitcoin over the next 10 years is very conservative. So I hear you all asking, okay, 24% next 10 years? What does that mean for my bags? Well, I calculated it for you, so you don't have to. That is an 8.5x. That means the Bitcoin price from now at 67K would go to 575,000 in the year 2033. That super sandbagged. And I think you can definitely take this to the bag if, of course, Bitcoin still exists in 10 years. We don't know if the planet will exist in 10 years. It always startles people when I say that, by the way. It's like, never assume anything was forever. Okay, it's a very important thing in investing. Things change, theses change, technology changes, and we are in a world where technology is changing faster than ever before. So don't bank on anything, set it and forget it. Always keep your eye on your investments. Always be ready to move to something else if something changes. Now, 24% compound annual growth rate is substantial, an 8.5x on your money. For people who are new to investing, they'll probably think 8.5x in 10 years, that's terrible. But if you come from the traditional Bank of America, JP Morgan, they are 3 of the top 4 money center banks. They run everything. The only one missing is Citibank. They were a little bit anti-crypto, but not like the others. But now they're pivoting over. Bank of America is now bullish on crypto. They had a whole report, and they talk about how the technology is a legitimate disruptor. Crypto is no longer simply a speculative hedge against a loss of trust in government, monetary, and financial institutions. For B of A to come out and say that is pretty astounding, ladies and gentlemen. I'll repeat that middle sentence again, okay? Crypto is no longer simply a speculative hedge against a loss of trust, they spelled it wrong, in government, monetary, and financial institutions. That is a very important part, because can we trust our institutions? I don't know. Mike, good to see you, buddy. Thank you for coming. Now, breaking news too. Speaking of banks, El Salvador want to set up a Bitcoin bank to give investors finance options. They want to really attract as much brain trust to the country to build companies, invest in the country, set up their startups. And that's already happening in the crypto space. They are crypto friendly. And more of this is happening. The wave is just getting bigger and bigger by the day. We have had so much happen in 2024, and people are still frustrated. Come to the conclusion that maybe some people simply can't be made happy. But it's been a crazy year. Now, on to the big story. And again, theoretical here. Inspiration for the story came from Vivek. Shout out to Vivek. Rumors are that some central banks are buying Bitcoin. You aren't prepared for what is coming. So, this is part of the whole game theory. Embrace it or die, I've said for years. Everybody, when I first started the channel 3 years and 5 months ago, everybody was against Bitcoin. Now everybody is flocking to it. Even the banks of Americas, politicians, states, pensions, countries, sovereign wealth funds. The question is, who is buying? And again, banks are in. Embrace or die. Now game theory is well and truly on. The question is this possible? So when I hear this type of stuff, I try to find out, okay, I put the little pieces of puzzle in my head, my small little head, and say, is this even possible? So first of all, we had this. So massive outflows of ETFs, price flat. Number one. Number two, all the banks are embracing. Bank of America pivot, etc. And all the great stuff has been watched by other countries around the world that's been done by Nayib Bukele in El Salvador. And then Vivek says central banks are stacking. So I went and looked at all the big on-chain folders. And I found this. Nobody's talking about it. But the question is, are these central banks? These 4 wallets did not exist 30 days ago. Okay? They're brand new. And they've all stacked monstrous, almost equivalent amounts. 3 of them have identical amounts. Okay? That makes me suspicious out of the gate. 17, 18, and 19. And I covered this the other day when I saw them pop up. 47,229 times 3 is about 141,600, 141,700. And then the third one that just popped up, okay, wallet number 16, just added 48,812. Add those 4 together, you got over 190,500. Call it 191,000 Bitcoin stacked in a couple of weeks. Who are these players? Yeah, they could be wallets from BlackRock or something like that. We're not sure. The problem is they just popped up. This could support Vivek's theory and my theory too. Somebody out there is stacking. Whales are stacking. We see it on chain. The question is who? And that's why the price is flat. And again, everybody's afraid. Everybody's losing interest, but not these players. Now, let's go a little bit further. Oklahoma, I talk about the embrace or die. Oklahoma did something very different. We talked about this bill over a month ago, and now they signed a bill into law that exempts Bitcoin miners from sales tax on electricity bills. Woohoo! Also, people can have their own self-custody, etc., and trade in Bitcoin and not pay taxes on sale, all that type of stuff. This was sent to the governor and approved by the governor. 29 to 15 was the approval rate. that is now law in the state of Oklahoma. So these states, like think of an Oklahoma being like a small country, maybe like El Salvador, they're beginning to try and embrace more of this industry because they know it's important for growth in the future. Now, this other fellow here, who will remain nameless, Samson comes out and says nation state Bitcoin adoption in full swing. This is the game theory that we talk about. And this person casts his vision for 2024 and beyond heavily now around a thing called Bitcoin. Bitcoin is on the electorate. Said it a year ago, said it a few months ago. Now it's happening. So is game theory happening. People are stacking. And now in the US, there's two teams. Warren should sue the other campaign for copying the font and the imagery. And I don't know if it's a joke or poking fun, but you have Warren in Massachusetts building an anti-crypto army and very proud of that. And the other guy, Donald Trump, is building a Bitcoin army. And the war is on. The question is, who will win? And it's fascinating to sit here as a bystander and watch all of this play out. Again, embrace or die. You cannot be against the revolution that's happening. It's like being, oh, I don't like AI. It threatens me. It's scary. I'm not going to touch it. That doesn't work. That's not how you survive in the future. You got to be pro-innovation, pro-disruption. That's the other reason I make this stuff. Let's get into some charts, some very interesting charts too. First of all, this is the periodic table of gainers, as I call it. It's from Fidelity, and it shows you going through the history of time. At the very top, you've got all the top assets, top performing assets of the year since, I can't remember, 1990 or so. And guess what? Gold never made the top of the table. But if you look at those orange boxes up in the top right, you got 1, 2, 3, 1, 2, 3, 1, 2, 3, 1, 2. That means we have one more box left to go. The top performing asset, okay, over these years is Bitcoin. And this shows you a very interesting juxtaposition of, again, Bitcoin against other assets. It's as if the market is trying to tell us that something about the emerging era of fiscal dominance. Again, gold never made the top. We got a new gold, and it's better than gold. So, thought that was interesting. Also very important. I've been talking about short-term holder realized price for a long time. This chart was shared by James Van Straten. And the Bitcoin short-term holder realized price is approaching 64,000. I've been talking a lot about 66,000, 67,000, 64,000 for quite some time. But during a bull market, the short-term holder realized price is the floor. Okay? So when you hear people talking about we're going back to 45, 42, 50, that would break history. Okay? That's probably not going to happen. This short-term holder realized price of 64K is that floor. Currently, as I'm talking here amongst my friends, Bitcoin price is 66,200. So we are, wow, we are $2,200 above that floor. So the question is, what'll happen? And if anybody's interested in a trading idea, if we do get to 64K, it's a pretty safe place to buy. And this is another thing that's super interesting. This is Coin Days Destroyed. This is a metric used to measure the economic activity. Hey, Blesso, good to see you, buddy. The economic activity of Bitcoin. It is calculated by multiplying the number of Bitcoins by the number of days since those Bitcoins were last moved. A simple way to think about it is if one Bitcoin has not been moved for 100 days, it would have 100 coin days in it. And Coin Days Destroyed is if that Bitcoin held for 100 days gets sold after 100 days. That would be destroyed and back to zero. Now, I did mention this within 2 or 3 weeks of the ETF being launched. I saw something very peculiar happen, and that was long-term holders were selling. And the long-term holders were selling before the halving. And I was like, why would they do that? They know all the gainers happen after. And my theory was they were selling to move to a safer vehicle, which was, in their opinion, the ETFs. But of course, this video's title is We Don't Need No ETFs. But anyway, that's what some people decided to do, because if they want to leave it to funds or trusts or loved ones, they felt it was an easier move. And we saw that here in this chart, the big spike of orange in early 2024. that shows you how the notable spike in CDD, coin days destroyed in early 2024, suggests that a substantial number of Bitcoins, which are held for a long time, were moved or sold during this period. But the good news is that has stopped. So a lot of people talk about, oh, the OGs, the long-term holders are selling. They did sell. They've stopped for now. But they sold and probably went back into a different vehicle to be part of the game. So we'll see. And this is the ascending triangle. And we have just retested the lows. This chart is from Jelly. And it's a perfect retest of the lows of this ascending triangle. And if we break out of this pattern, according to Jelly, the next target is $100,000. That's half of what Bernstein think we can do next year. So we'll see where all this goes. It does need money. But again, one thing I do want to mention, though, regarding the game theory, if it is true that central banks are buying, that will trigger the most incredible game theory I've ever seen. And that's why we are in this game, because then price could really go absolutely bonkers. Because central banks, they can print their own money and buy Bitcoin. And I tell you, and this is going to sound really sketch, probably the sketchiest thing I've ever said, but if I had a country and I owned a central bank, I'd print an extra 5%, and I'd use that extra 5% to buy Bitcoin and stick it in my country's treasury. Okay? Nobody would know. Nobody would care. So, and then I'd robustify the balance sheet of the country. Anyway, if anybody's listening, good idea. Do it. Also, sideways, after the halving is normal. This is from the Scaping Pro. I thought I read it as Scalping Pro, but it's Escaping Pro. Thank you, Green Candle, as well, for that nice little target in the comments. I see you live. But sideways after halving is normal. Go back to the previous cycles. Chug sideways back in 2015. Chug sideways back in 2020. Chugging sideways right now. And we are going to run out to 2025. So again, my promise is to be here every day for you guys through 2025. Let's go. Also, the drawdowns. A lot of people think, oh, it's been a brutal, we're in a bear market already. Well, no. People are short-term memories. This from Alex. And you see the bull cycle so far is performing exceptionally well, with over 100% return on investment since the beginning of the year, and easy access to buying via ETFs, a rise in CME action, and so on. It seems to me that Bitcoin is missing some drama because we've had no 30% drawdowns, no significant shakeup. The lowest we went is, 19.7%. And again, that's far, far, far less than previous bull runs. The more money flowing, that perpetual bid coming in will help keep this thing afloat. Good news. Now, by the way, regarding the correlation model between the ETF flows and Bitcoin, I was going to do it today, but it takes a lot of time to run those numbers. So I'll have it on Monday or Tuesday, and it'll be interesting to see, because we went from 85% correlation to 61% correlation to flows. Now it'll be interesting to see what happens, especially with this huge dumpage and the fact that price did not move. I find that interesting myself. Let's look at the bull run. This from Rex Capital. They, again, compared previous cycles, especially the 2015-2017 cycle. Bitcoin peaked 518 days after halving. 2019-2021, 546 days. And then if history repeats, we'll go somewhere 518 to 546 days after the halving. That would mean Bitcoin could peak in this cycle mid-September or mid-October 2025. Target, per this chart, about 160,000. And Bitcoin is accelerating. Again, we've got 35 more days to go to get out of these doldrums. And then we go. Then it'll be great. And just imagine if there are central banks buying. Wow. Bitcoin playlist will be at the end of the video and hopefully here later. Let's talk about those ETFs and talk about the huge, crazy dumpage we had this week. Day 108 in the box. Monster dumpage from Fidelity, ARK, and Grayscale to the tune of $200 million. Nasty, nasty. You can see here, the only puppy that was positive for the week is BlackRock. Well done, BlackRock. And we're back to red. We have had, of the last 5 days, 4 were red. 4 were red, which It's kind of an unusual pattern because we've never had that before. We had negative, positive, negative, and we had 4 negatives in a row, but never 2 negative, 1 positive, 2 negative. So it's interesting to see the amount of Bitcoin added to the system, 2,877. But may I remind you all very carefully, we don't know who this is. But when they stack 191,000 Bitcoin, and again, it could be ETF wallets, we're not sure, but it's just too symmetric to give me pause. BlackRock doesn't do this. They don't disclose their wallets, and nobody else can stack 200,000 Bitcoin in less than 30 days or move stuff around. So it is intriguing. And if there are any on-chain analysts out there, I'd love to hear your thoughts as well. But that's a big bag. So if you are stacking 191,000 in less than 30 days, these guys are only pumping 2,800 into the system. That's not enough. Not enough. And Grayscale dumped $350 million worth in 7 days. That's 5,303 Bitcoin. But that the bleed is still stunning me that it's still so hard. Thank you, The Great Escape, that they're still dumping so hard. But the question is, how long can this bleed last? Not forever. And a startling chart from CryptoQuant to put the Grayscale dumpage in perspective. Okay? Since the beginning of the year, the total outflow from Grayscale amounted to 340,601 Bitcoin. That's $18.5 billion of drainage. Just focus your eyes on the speculators pre-2021 that got into this trade, then flat, and then the dump has not slowed. It's just going down, and this thing is bleeding out. Remember, they had 631 at the beginning of the year, 611,000 at January 11th, and now they're down to 280,000 by my calculations. 341,000 gone in a very short window of time. Thank you all for coming. Hope you like the show. And if anybody works for a central bank and they're stacking, drop a comment below and let me know. I'd love to know. Thank you as well, TNT Tesla and Sean Donnelly and Blazo and everybody else here in the chat and The Great Escape. We all want that great escape, everybody. That's why we do this. Stay well, stay healthy. See you later. Back in about 2 hours.